The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, we wrapped up the trading week on Friday with another rough day in the commodity markets. Just a sea of red across grains and a little bit of pressure mixed in the livestock trade as well, although we did see some green on the screen in the livestock trade. Here to walk through things with us, we welcome back into the program Kristi Van Ahn-Kjeseth with Van Ahn and Company. Kristi, always great to catch up with you. Hope things are going well.
It is. You too.
Well, we were chatting a little bit off air. I know weather, of course, is a big topic of the markets this time of year. We're going to dive into that more, but I feel for you and folks in the Northern Plains who got snow on the ground here the last 24 hours. We, just don't need more of that white stuff on the ground here when the calendar is mid-April, do we?
Yeah, no, we here in Alexandria, Minnesota, it probably got 5 to 6 inches of snow. Just north of us, school was 2 hours late, and it's just this ongoing joke. A couple of weeks ago, teachers sent home emails saying, hey, snow pants can probably stay home. We don't need to bring them anymore. And here we are pulling them back out and making sure everyone has their snow boots and their mittens. And unfortunately, it's not melting right now. So we actually have cool temperatures tomorrow and probably into Sunday. And so this is probably going to stick for a little bit. If we can get warm temperatures, it's not all that bad if we can flip the switch, but we are struggling to flip that switch. So here and throughout majority of Minnesota, we got snow early in November and it really never left. And it was a lot of snow. We had a lot of snow all year long. And so the frost wasn't all that deep. So we actually had the frost come out pretty quick. And this layer of snow that we got, I think will help kind of seal the deal so we can start getting some stuff drained and everything. Last year, we didn't have the snow, but we had such cool temperatures. I mean, we had snow, but we had such cool temperatures that the frost took forever to get out of the ground. And that really held guys back from being able to plant. So if we can switch kind of the page and get to a warmer temperature, it's going to make a big difference. But right now, the forecast does not look like it's going to, switch to warm. And they are starting to build back in moisture for us Thursday, Friday, Saturday. That's a week out forecast, so we know how much that can change, but it's just not looking the best right now.
Well, and you would think with some of that weather forecast and some of that worry, we'd see a little more of that impact in the market trade. And I thought maybe that was the case to start the week on Monday. We had a really strong day, but ever since then, we've just given it back and then some. And it just feels like that weather's not really taking a front and center approach here. Supply demand fundamentals in this market just not really front and center. It seems to be more economic, outside market worry driven, debt ceiling driven. Is that kind of the vibe you get from this market overall as we wrap up this week, Kristi?
Yeah, I think so too. Talking to producers in Minnesota, North Dakota, South Dakota, this winter has been a very, very drawn out, long winter, lots of snow, lots of poor driving conditions, and they're just over it. And it's like, just a double whammy for them to be completely over it, waking up to a snowstorm and then seeing the markets do what they are doing right now. And it's just really frustrating. And I do think to a degree, you have multiple factors playing into where the sell-off is coming from. And I definitely think some of it is economical based, right? We have a lot of talks happening in Washington right now about debt ceiling, and it doesn't seem like we're getting anywhere. We have a Federal Reserve that said that they're going to continue to fight inflation. And so they're really taking that bold stance that you could see an interest rate hike once again. And they really started to hint at possibly ending up seeing a recession. And so I think a lot of people are looking at these markets right now and saying, hey, I can have my money on the sidelines and be getting decent interest rate on it in a savings account. I can be putting it in a short-term CD right now and getting really good interest rates. And so I think all of those things are playing into a role that you could potentially see these people pull their money out of commodities, out of the outside markets, and really just sitting on the sidelines. And we have to remember that a fight on inflation is also a fight on food inflation. So, this does play a role into commodity prices and wanting to really keep those in check. So I think that's part of it. I think you're also seeing a week out forecast that does look favorable for some areas to really get after it and get planting. And we know that where the concerns are, the lack of planting, Minnesota, North Dakota, and South Dakota are kind of the last to matter, right? You focus on all the big I states and you focus on those. And then from there, it's like, all right, like you got to get going here. We actually do need you, but we have some time on our side yet. And when talking to a lot of producers, we were in this predicament a year ago, right? So a lot of producers did not get started planting until May in Minnesota, North Dakota, and South Dakota. And it really was not ideal for planting. And we ended up having, if we could have caught a couple rains, some good conditions, some good yields. But right now, I think that's where the market is saying, hey, it's still a little bit early for Minnesota, North Dakota, and South Dakota. Let's not get ahead of ourselves. So you're seeing this selling pressure come in, and this is where we really need those support lines to start showing up and holding. And they held about a month ago, right? We were at these levels 2 to 3, 4 weeks ago, and they held. It's a matter of how many times do we want to kind of get down to those levels and tap at it, because eventually, you keep trying to get through it, you will get through it. And so right now, today is not a good day if we close below $5.50 corn. We're below $13 on soybeans, and that's going to open up some price counts to the recent lows from the third week of March, which is around $12.50. And then you look at spring wheat and you say $8.50 needs to hold. Once you break $8.50, we see what we saw last time and going quickly down and trying to print a 7 in the front of it.
Yeah, a lot of pressure here in these markets. And to your point about folks moving to the sidelines, a lot of funds really selling heavily in corn, beans, meal on the day on Friday. I know, too, another factor in this whole equation is the cheap Brazilian offers that are out there. Corn beans, I mean, they got that massive bean crop, and a lot of that farmers selling in South America. Sometimes we lose sight of that, but I think that's playing into some of the pressure in our markets as well here, Kristi.
Yeah, I think that's playing a big role into it, is seeing that they have the fresh soybeans. Not only that, you built so much premium into soybeans. We're really wanting to talk about Argentina, the concerns of how small their crop is going to be for their drought. And you came in here and quickly we've seen how fast Argentina's been able to get some soybeans from Brazil. And so that's the question right now is, does it matter if Argentina doesn't have the crop and Brazil does? And, I think the market's realizing maybe it doesn't matter. Maybe we need to start lumping them together and saying, what is South America coming out with a production level as a whole year over year versus kind of trying to compare them? And it's always nice to see that premium be put in. But when you're looking at it, it seems like the market's not concerned anymore that Argentina doesn't have them, that Brazil has plenty of beans to share at this point. We have even shook off, we had a great crush report here in soybeans. Crush was extremely, extremely strong here. And the market was kind of like, we're good. We're not worrying about it right now. We're ahead of pace on export sales. We're shipping our beans great. But it's going to take a little bit of, hey, we're going above and beyond to really gain the market's attention, I think, at this point when it comes to export numbers.
Well, and looking at the markets as well here this past week, especially quarter beans, we saw it again in corn on Friday. A lot of bull spreading in this market. As you look at old crop, a lot of talk, end users, they're trying to pry corn and bean supplies out of farmers' hands here in the U.S. And I want to segue to the cash side of things here as we look at old crop. Kristi, I know you tweeted out some things this week, looking at the cash basis. We're hearing a lot of anecdotal reports about strong basis here and, this old crop trying to get this supply out of farmers' hands. So what's your take on how that situation is right now?
Yeah, I tweeted it out, and I'm trying to get better about tweeting. Like, I feel like I tweet and then I forget, and then I start tweeting again. And it's like, I'm so sick of having a phone attached to me that sometimes I just completely forget about it. But I did post that, and it was really about that relationship when you're looking at, we were the same cash price. I used an elevator in South Dakota because they post their historic basis. So you're able to pull it in and get that day, which is really nice. And so I used it and we kind of just tracked it back, and you're at the same price you were at last fall. But the difference is futures price are 70 cents off last fall's price, and basis has made up all of that. And I think that's what you're seeing is basis levels are very strong. And I think there's a couple of reasons by that. One, that's a South Dakota number. So P&W bids with this recent buying from China like 3 weeks ago is going to play a role into it. Two, I don't think you have any farmers selling right now. They look at the board, they look at the futures price, they're unhappy with it. You're all the way off of July futures for majority of cash bids right now. And I think mentally a producer is looking at it and saying, why are you bidding off of July when May is 30 cents? Now today, 45 cents higher. I should be getting that price. What they're not putting together is that they're making up for the most part in that basis level. But it's kind of a snowball of effect of where you're not seeing a producer sell right now. I also think a producer just really wants to be in the field. And the last thing they want to be thinking about right now is delivering corn. They want to have everything ready. They want to make sure once they do get that opening, they're ready to go. And so basis levels are really strong. And I kind of posted about it just because there are opportunities here. You might not be happy with the cash price, right, where it comes out, but you have to take that basis out separately and look at it and say, is this an opportunity to be doing a basis only contract? Now, if you're doing that basis only contract, there's a lot of risk on the table for futures to continue to go down, right? So the risk is you lock in the basis, corn market continues to kind of falter here. If corn falters, you may see basis improve. So not only do you have, lower futures price, you missed out on a higher basis. So I want to make sure that people understand there is a lot of risk by doing a basis only contract. But right now, when you look at that, it does look really favorable to be making sure, hey, if I know I'm having corn coming out and want it delivered in this month, there are some very, very attractive levels to be looking at right now.
We are having a conversation today with Kristi Van Ahn-Kjeseth of Van Ahn and Company. Kristi, to your point there, looking at the basis and, the thought of farmers are busy. They want to get in the field. They're not necessarily worried about their marketing. Don't want to lose sight of the marketing, though, during a busy time of year and some of those opportunities you mentioned. So any other thoughts risk management wise here, old crop first and then new crop as well? We can talk about that a little bit too, but any other thoughts that farmers can remember here, just trying to manage some of this risk in the grain trade right now?
Yeah, I think at this point you need to be a little bit patient, right? It's, we got our rally, we got a short-term rally, it's fallen back down. And, at this point you have to rely on some key technical levels and say, let's see these levels hold. And unless these really drop below it, let's ignore it for a little bit. That's $6 July corn, $5.50 December corn. On beans, we've been sold out of beans for quite some time, just because seasonally, basis wise, it is nice to be done with corn or done with soybeans by February, March timeframe. That dynamic could change a lot moving forward with renewable diesel, but as of now, typically your opportunities are a little bit earlier in, the year. Looking at November beans, seeing this level of 12.50 holding, spring wheat, seeing a level of 8.50 holding. As long as those levels hold, we're going to be a little bit patient here. But it does make us want to be more aggressive on marketing if we get those opportunities. So you get back up to $5.96. It wouldn't be surprising if we jump on 20 to 30% marketing in one chunk. It doesn't mean it needs to be sales. It can be a mix of different positions or no sales at all, just on a farmer's comfort. But given the dynamic here and the ability to get a larger carry out just with the acre numbers we have for corn, we will go aggressive if we get to those targets.
Let's talk livestock a little bit. Cattle trade really kind of all over the board on Friday. We were lower, higher, mixed, you name it. All of that ahead of a cattle on feed report, which, waiting on those numbers. But again, I think with whatever we get with that cattle on feed report, going to be neutral to probably bullish, I would assume, in this market trade. This cattle market's just been on fire, Kristi. We've heard the feedlot bids, especially some of those northern bids out there, just massive numbers. What is your take? What's your opinion on this cattle market right now?
Yeah, fundamentals are crazy friendly when you look at them. It's really hard not to pencil a story that's not friendly when you look at the fundamental side. My only concern is economic, right? And it doesn't seem to be a problem right now. And technicals, and we seem to be handling price counts pretty okay right now. And you're right, cash, especially in the north, you're starting to hear people get desperate and try and pull these June cattle forward even to May. And it's just what it is creating a bigger hole down the road. And if we're going to continue to do this and create the bigger holes and bigger holes and bigger holes, you have to imagine that's going to end up playing itself out in the futures board. We can't say for sure that it's going to, but that's what it's looking like right now. And I really do think there's some huge holes out there when you look at it. And I think where you look at the cattle markets, it's okay to be friendly. It's okay to be optimistic. I think you just really got to set at it and say, hey, where do I know I need to be making some protection if for some reason something turns negative or economics turn negative? Where is my line in the sand that I'm going to say, oh, nope, it's done. I'm going to do something here. And I think that's the most important thing for a producer to do, but that's going to be on a farm case by case basis.
Well, and to your point, economic wise, we see how the stock market and the dollar, et cetera, can really play into this livestock trade day in and day out. And, I wonder as well if we end up having some sort of recession or have more economic issues tied with a short supply of beef, especially I think retail demand, right now. I mean, folks are still buying steaks, but if we don't have the amount in the store, plus we have inflationary fears, et cetera. So I just wonder how that will all balance itself out, Kristi.
Yeah, I mean, I think one of the big things I'm focusing on and looking at is, right now, you talk recession, you talk issues like that, but you still see, plenty of people hiring. You have not seen real layoffs yet. You've seen some layoffs start in the big tech world, right? But you haven't seen it on a local level on, factory jobs, things like that. And so if you're continuing to see this, I think the money supply is there when you look at just, what kind of money got pumped in the pipeline with COVID relief, COVID propaganda, all of that stuff moving forward. And so I think that when you look at where you have money to spend, you still have that money to spend. And we see what groceries have done, right? And we talk about it. We want to harp on how expensive food is, how expensive groceries are, but no one's really been cutting back yet. And so I think until you start to really see the money start to dwindle down and you really talk about that, I think that's a big difference there.
Hog market. I have not had anything good to say about the hog market here in the last couple of weeks, except on Friday, somewhat okay day, some green numbers on the screen. But, we think of a cheap alternative to beef, pork being that in the stores. But overall, just this market, the fundamentals here, trying to find a bottom. Do you have anything? I guess I will say this. Do you have anything good to say about this hog market right now, Kristi? Because I can't find much.
Yeah, that it's hanging on by the hair on its chinny chin chin. Like that's pretty much it. So, it's doing everything it can to try and round out a bottom. And it's not doing a very good job at it, but it's sufficing, right? So when you look at it, you're hanging in there. And I think that's at this point, those are your expectations. Like, can you just hang in there for us and try and get some support until cash can somewhat be supported? And I do think it needs to take a flip of cash trade before you can really get this futures board to really settle on it. We're still a little bit, futures are still above cash trade. And so we do need to see that turn before futures can really go. Technically, you really want to buy it. You want to look at this market and say, it's friendly. You made new lows, but you're able to close well above those new lows, but it's got to get moving here.
Well, we covered a lot of ground today, Kristi. Before I let you go, any final thoughts, anything else you want to share for us on this Friday?
Yeah, be safe out there for planting. Hopefully progress goes well. We know here it's probably, central Minnesota, North Dakota, South Dakota, from what I've understood, it's probably looking like 2 weeks out before things can get moving here. And the worst thing that can happen is that we do end up materializing and getting that rain next weekend for a lot of those areas. So weather forecast on Sunday evening is going to be a very big play into this market. And we know the crop can get planted really fast. It's just getting the opportunity to plant it is what we need.
Well, Kristi, if folks want to reach out and get some market advice from you as well and the team there at Van Ahn & Company, what's the best way to reach you?
You can call us at 1-800-648-5494.
Fantastic. Kristi Van Ahn-Kjeseth with Van Ahn and Company. Always a pleasure. Thanks for joining us here on Market Talk. Have a great weekend, and we'll talk to you again soon.
Perfect. Thank you.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.